The US dollar and treasuries are selling off as fears of a recession get deeper. It's Friday, 11th of April, and here's what you need to know. China has fired back against President Trump, bringing its tariff on US imports to 125% after the White House took the duty on China to 145%. As the trading relationship between the two economies breaks down, markets are very jumpy. Even though some tariffs were paused this week, the average duty paid by American consumers on imports is set to reach 27%. That's the highest since 1903, and Goldman Sachs says that gives a 45% chance of a US recession this year. Our chart of the day is the US dollar. It reached a 3-year low against the euro. That's not what you would expect to happen in times of market volatility. Investors would usually be piling into the dollar as a safe haven, but that money is instead moving into the euro, the Swiss franc and the yen. They're also selling off US debt. The yield on the 30-year Treasury hit 4.9% overnight. It's on track for its steepest weekly rise since 1982. Our stock of the day is JP Morgan. It kicks off the quarterly earnings season later today, and we'll find out more about how it plans to navigate the tariff uncertainty. CEO Jamie Dimon said this week he expects it to lead to a recession and defaults from borrowers. Morgan Stanley, Wells Fargo and BlackRock also report today. Dimon also said the uncertainty has hit investment banking and led to IPOs being cancelled. You may have missed then that Chinese fast fashion giant Shein got approval from regulators in London for its IPO. It's a surprise in some ways that's still going ahead given the steep US tariffs on China and the fact that President Trump has scrapped a tax exemption that allowed parcels under $800 to arrive in the US duty-free. Shein was valued at $66 billion back in 2023. In February, Reuters reported that could fall to $50 billion, and of course that was before the recent tariffs. And that's what you need to know this morning.